Hey folks, Simon here with your Tower Daily update for market close Thursday the 31st of July 2025. And on Thursday, markets delivered a pretty considerable head fake. We had Nasdaq futures up about 1.3% on the open, driven by market reactions to stellar results from Microsoft and Meta. But the Nasdaq actually ended up closing in the red, down 0.5%. And I think this is just starting to send a little bit of a warning. Let's just have a look at those two stocks first of all. Microsoft, look, it finished up 4% on the day, but it closed 4% from its highs, opened at its highs, closed on its lows. I mean, yeah, it's a nice gap up, but that's not a hugely bullish candle. This is actually a bearish Maribozu candle. This gap may look to get filled in the coming days. Meta performed somewhat better. It managed to hang on to its gains, closed up 11%, closed pretty much where it opened, and this looks like more of a continuation gap than one that's going to get filled quickly. But what I find notable is the fact that the Nasdaq Composite made 141 new lows on Thursday, and that's the most since April 21. All right, when there was a lot of fear and uncertainty, and we were still in a downtrend back then. All right, I'm not a huge market breadth guy, but I think that is notable when the index has just made a new all-time high. It's just a sign that breadth is starting to tank, and that can often mean the end of a rally or a local top. I'm not thinking we're going to have a massive bear market or huge correction here, but a pullback to support would not surprise me at all. And we are entering obviously a seasonally weak period for the market as well. Looking at other results, we had Apple report after market as well on Thursday. If I can get the code right. Let's just drop down to an intraday chart here. Apple closed up about 1.5%. All right, so nothing sensational. Probably not enough to offset the decline in Amazon. Amazon finished down about 6.5% after market. So, neither of those are really going to come to the market's rescue. Another observation that, it's kind of fun. This is only the third time in history that the S&P has had 3 consecutive open to close drops after an all-time high close. All right, and the other 2 instances both happened within the last 18 months, and they were not particularly bullish. Now, don't get too excited about this. Sample size of 2 means nothing statistically, but I think it poses a bit of a warning. VIX hasn't really woken up yet. I am looking at some VIX call spreads today just to act as a bit of a hedge. That's what I got for you today, folks. I hope it helps, and I will catch you next week. Thank you.